This is Brian Stoll for Timing Strategies, Thursday, August the 11th. Yeah, that's right. Okay, I want to go through this again real quick. Sorry I missed yesterday. I just had too many things going on to do a post. Today we got a little bit of rain, finally. It has been dry walking in the desert like the poor tribes of Israel for 40 years. We finally got a little rainstorm in the desert. You look at the spiders, SPY, surrogate for the Standard & Poor's 500. We got a lot more volume than we had on the way up in just one day. Currently our position is short. We've been short ever since the highs of Tuesday, Wednesday. I've been my previous comments on that. Looking for a test, come back down into that 20 bar average on the SPY at about 153, potentially down to as deep as the 55 day, which would be a bigger sell-off than anticipated. But if we come back down to about the 20 day, I will be looking, depending on price and volume action, primarily price action, to close the short position and potentially take a long position going into the end of the year. Remember, we got an election and we got a very active Fed and Treasury Department doing their thing to make sure that the economy is Goldilocks. Anyway, that's my little take on it. What I do want to point in, like I said, is that we are short, looking to cover in the next few days somewhere down in this range between the 151 to 153 area. Point of interest, I want to bring in the gold miners ETF, the GDX. Today we had huge volume today on that, and that looks about as classic of a spike potential reversal top as as they get. Heavy volume on this. Is there a whiff of deflation coming in? I think so. I hope so. The Fed needs it if they want to stay in business. Otherwise, their dollar, their Federal Reserve notes become irrelevant very quickly, and nobody wants to take dollars anymore for anything that we want from them. So again, keep an eye on that GDX, the Gold Miners Index, heavy volume, but definitely look to be a buyer on a pullback of this. There's no question that we want to be in the oils, you want to be in the gold, especially the oils on a general turn back up in the market after we get enough of a sell-off to make it worth the risk reward. Interesting, another point on this one is the SMH, which again being a proxy, kind of the canary in the coal mine for the NASDAQ. NASDAQ 100. This is saying sell. I do not want to own the NASDAQ at this point or anything to do with the SMH, which half the NASDAQ is the SMH, the semis. But basically what the NASDAQ is being driven by, the NASDAQ 100, is RIM, Google, Apple. That's about it. But the rest of the manufacturers, not just the internet, nebulous components of it, the manufacturers, the chip and the equipments, AMATs and so forth, say no thanks, don't want to stay up here for much longer. So keep an eye on that as well. The SMH, the GDX, those are the two best leading indicators except for the banks. And I want to bring up a point here about the banks. If anybody takes a look at any of the broker dealers, major primary dealers like Citigroup, looking at Citigroup from its highs, we're down still 20-25% in Citigroup. Major bank, major brokerage firm. Let's take another look at another firm like, let's say, Merrill Lynch. Same problem here. Merrill Lynch 15, 20, 25% off its highs. Let's take another look at another bank. JP Morgan, come on down. What's wrong with you too? You're off your highs so bad. Can't catch a bid, can you? Well, maybe we can have better luck with Wachovia. Nope, no love there either. Wachovia is still 10, 15% off its highs. Maybe UBS. They make money the old-fashioned European way. Nope, they don't make it either. Pick up any other one. I don't want to belabor this point. Morgan Stanley. Not much love there. Look at some of the bigger banks, just that aren't primary dealers. Bank of America, again, 10, 15% off its highs. Compare any bank you want, other than a discount brokerage firm like a Schwab, to my favorite, Goldman Sachs, or what I like to refer to as golden rats. Yes, golden rats. And I tell you why I say that. If you want to send me an email, I'll give you a full discussion on what's going on here. But anybody that is owning any other bank or primary dealer stock other than Goldman Sachs, must be wondering how come Goldman Sachs is the only stock making new 52-week highs, going straight parabolic back up higher than it was back in the sell-off of June of this year, and all my other bank stocks or other primary dealer bank stocks are 15-25% below there. You got to ask the question, and if you really want to know the answer, I can give you my opinion, but I will not broadcast it. Why here? Send me an email. I'll be more than happy to give you a thorough understanding of where I'm coming from on this point of view. But for the main purpose of this commentary, SPY, spiders, S&P, look for the pullback somewhere back down into the 153, 152 level, potentially as deep as the 150, 50 half level on the spiders, potentially to be a buyer. I don't think that'll happen for another few days. Remember, we've got the October 17th, 1987 crash, anniversary, happy birthday, whatever they want to call it, 20-year class reunion. It's going to be there, so you can be sure that we're not going to get too much selling, or we shouldn't see too much selling going into that, because that's a big media event. Wall Street wants to make sure that you know that the markets only go up. All right. So again, this is Brian Stoll for Timing Strategies, October the 11th, Thursday. Still short, looking to cover our shorts a little deeper than this, and then think about going long depending on price action. Good night to everyone, and I welcome your comments and responses.